Liberation Day, April 2nd, 2025. The day that reciprocal tariffs were first introduced and the world would never be the same. Fast forward 6 months, tariff revenues are soaring, global trade has not collapsed, and the WTO is continuously revising its very negative forecasts. Will these trends continue, or is this just yet another calm before the inevitable storm? In this episode, we'll break down two reports that just came out earlier this week. One is from the WTO and the other from the New York Fed. And both look at this trade picture from slightly different angles. And through it all, we're going to ask the question, are we indeed entering a brave new world of a new global trade order? Or are we, again, just misreading short-term volatility? All that and more right here.
Let's get it. Let's get into it.
It's the root of all evil, of strife and upheaval.
All right. So WTO. So we've talked about them a number of times in the past. We've gone through their data. We have tried to form our own opinion based on that data. So one of the things I wanted to look at today was some of their context and commentary that they have written about and published around global trade, specifically with regards to are people calling it a trade war even at this point, or just new tariff regime, new tariff policy, I suppose?
That's a good question. I mean, I read up a little bit about this after I saw your notes, and I don't see the word trade war a whole lot. Although it's just like a label.
Yeah, I always thought it was kind of a silly term in itself. Like 2018, 19, that was in the news all the time. Trade war with China, trade war with China. And tariffs were like...
The word war in general, I think it's just there to get clicks. Yeah, the war on whatever.
Yeah, no, I mean, that's definitely why it gets picked up a lot. But I mean, I guess even without, like, in the click era, didn't, like, economists call it trade wars before that? I'm not sure.
Trade disputes. I don't know. That'd be interesting to try to draw the line between what economists would call it and then what happens when it ends up in the news.
Another story for another day. All right, here we are, World Trade Organization website. And periodically they create these big reports on their views on the global trade outlook. And they've published a few of these through the year so far. I wanted to focus in on the one that they released in mid-April. So basically 2 weeks after the initial Liberation Day, tariffs were announced. They said they were coming in a week, and then they were quickly withdrawn or put on hold just before they were supposed to go into effect. So about 1 week after that, this report came out. So this is a big, long 40-pager here. They really get into it. We'll link this full thing below, but what I wanted to go through here is their press release, their summary, if you will, of what their views are. On the whole, so in April, the WTO's outlook on global trade really seemed to be quite negative. And so, like I was saying, this is right after Liberation Day, and they say explicitly this is premised on the tariff situation as of April 14th. And then their main conclusion is that the volume of world trade, they say, is expected to decline by 0.2% in 2025 under current conditions, nearly 3 percentage points lower than what would have been expected under a, quote, low tariff baseline scenario. And then they go on to quote the WTO Inspector General, who says, "I'm deeply concerned by the uncertainty surrounding trade policy, including the U.S.-China standoff. The recent de-escalation of tariff tensions has temporarily relieved some of the pressure on global trade." So that's referring to that 3-month pause that was put into place about a week after the initial announcement. So we're at a point where the tariffs seem to be coming, but then they weren't again. So it's a very uncertain environment, and that's what they're trying to emphasize here. And then they go on to say, however, the enduring uncertainty threatens to act as a brake on global growth, with severe negative consequences for the world, the most vulnerable economies in particular. In the face of this crisis, WTO members have the unprecedented opportunity to inject dynamism into the organization, foster a level playing field, streamline decision-making, and adapt our agreements to better meet today's global realities. So that seems pretty strongly worded to me.
Yeah, what does that last thing mean? It's like we now have this chance to inject sort of a new dynamism.
That's a great question. I am not sure what the WTO dynamism injection program looks like.
And she said this? Was this at a speech? You could like throw in that speech or just the clip and see what she's like.
We should seize this chance of the trade crisis we're in to tackle level playing field issues, policy space issues for poor countries to grow, better decision-making processes, and so on and so forth. And we should inject more dynamism into the way the organization works. Our rules were never meant to be set in stone for 30 years. They were meant to be updated and re-dynamized as needed. I'm grateful that members really see the value of the organization and are coming together to try to see how to support the valuable most favored nation stability and predictability of world trade. Now let's get to work. Thank you.
I don't know why the U.S.-China standoff would have anything to do with them opportunity to inject dynamism into that organization. The only thing I can think of is I know the WTO has been under a lot of I guess pressure for reform, but like, we don't have to, that's like a whole separate thing. That's like super interesting back in the 2021 and 2022 and stuff. Some of the members, including the US, have been very critical of the WTO. So maybe this is a nod towards that. I don't know.
And I think actually, so I'm not exactly sure of all the details you're referring to in 2021. I think this Director General was installed in 2021 as well. So this is the same Director General at that time that's still in place today. So back in April, at this very chaotic time when people thought that global trade was just completely turned on its head, what was the WTO planning on doing in order to foster a level playing field in the face of that unprecedented challenge?
Well, I mean, how do they even measure a level playing field? If they were really trying to foster a level playing field, you would expect, I think they would say, like, everyone would have trade deficits of zero, like it would all cancel out or something. I don't know. That would be one interpretation is all I'm saying. So what exactly do they mean?
I don't think they even talk about it. This is just kind of like a summary quote up top. And then they go into, throughout the report, what their projections are for world trade at the global level, at the regional level, and then also growth expectations, both at the global and then regional level as well. And so that's what the bulk of the report is about, going through and basically just laying out their thought process for, all right, it looks like there's a wrecking ball being taken to the global trade system. Here's our best guess at how bad we think it's going to be. That seems to me like the clear angle that they're coming out with this. It seems like a foregone conclusion that this tariff policy is going to be unequivocally bad for everyone involved.
Yeah. Yeah, no, that's a really good one. The world merchandise trade volumes. And like the baseline forecast, again, I mean, these forecasts, you just keep drawing a straight line.
Looks very scientific here.
And then the adjusted forecast is so the negative.
Let's just take it down.
Yeah. And then back up. And this is as of April. So that's the outlook as of April. Okay.
As of, April 14th. And then similar with their GDP forecasts, they say previously they're thinking 2.8% in 2025, 2.6% in 2026. They revised that downward to 2.2 and 2.4. So that one's not really quite as stark. Whereas on the trade component, they think there's going to be a net contraction in global trade year over year, as compared to a 3% increase baseline assumption. And then, we could just take a quick look at this data and then see how it changes.
I mean, this table really stands out. They just put it right next to each other. They give you historical numbers. Then they give the baseline forecast for North America that like 2.2 under 2025 and 2.9. And then the adjusted forecast damped down 12.6% in trade volume. And that is going to be a huge driver. That's going to be the huge headwind that pushes the entire world negative. A swing, yeah, almost a 15.
That's huge.
That's
you know,
huge.
what's the annual volume of trade that the U.S. does with the world? It's well over $1 trillion, right? So it's 150, $200 billion. They're saying.
Yeah, I mean, a trillion is
Difference
just a
in net
deficit.
trade.
Um,
I thought that was the trade vol. Or yeah, no, actually, no.
let's pull that up.
What is the volume? Yeah, because you're right. That's the deficit. Now I'm like, now I want to say 4 trillion, but I'm just making that up, I think.
Total trade with the world, a deficit of 918 billion in 2024, imports of 4.1 trillion and exports of 3.2 trillion.
Yeah, so 4 trillion. Yeah, that's $600 billion net change. If we were to see that really happen, then it seems reasonable to make some of these pretty terrible forecasts.
Yeah, that's pretty brutal.
But yeah, so that's on exports. On imports, North America, pretty similar story. But the imports, their net decrease is a little bit less than exports. So, there's some sort of assumption that the U.S. is going to export less than their decrease in imports. So the U.S. is going to keep importing, but on net, they're going to export even less because the tariffs are going to be too high and other countries aren't going to want to trade. Seems reasonable, but it's a very draconian assumption. And similarly, the second half of the page, we can see what they think for GDP growth rates would be. Like we said briefly earlier, about 2.8 to 2.2%. So they're think a minus 0.6% overall, with, again, the majority of that coming in the North America region. All right, so that was the WTO initial reaction to the new trade regime. We fast forward now into August. So this was now after the initial 3-month pause in tariffs. There was furious activity of other countries trying to strike trade deals with the U.S. The UK was one of the first ones. There was some contentious but cordial meetings with China. Things didn't get worse. Things got just kind of delayed. So this is in this intermediate period where reciprocal tariffs are still coming, but it's still not clear what the outlook's going to be. So there's still a significant amount of uncertainty baked into the outlook for trade at this point. So what does that mean for the WTO's projections? World merchandise trade is now projected to grow at 0.9% in 2025, up from a decrease in 0.2% that they thought previously. But that's still down, they say, from the 2.7% baseline that they had before this new tariff regime was announced. So it's less negative than before, but still really emphasizing just how negative the impact is going to be from all of this. And the less bad outcome that they saw so far in August at that point was really attributed to mostly the front loading of imports of other countries trying to get ahead of the tariffs. But that kind of confused me a little bit, because if you're the WTO and in April you think that trade is going to decline by such a drastic amount, wouldn't you also assume that countries are going to do this front-loading activity?
When did the data actually come out for the front load? Like, when does GDP data come out? Because, in April, I guess April 8th, I guess it hadn't come out for the first quarter. But they must somehow they must have been able to see this coming. I mean, the whole reason why it happened when it did was, the reason why they did front load it is, not because that Trump came out and surprised everyone with this, these tariff things. Everyone knew tariffs were coming, and they front loaded in January, February, and March. They didn't know how much, but they were already front loading it. So it's not as though this was like a huge surprise to the WTO come April. I mean, what they're saying, they're adjusting now they're changing the world trade number from -9%. They're adjusting the world trade number from minus 0.2% up to positive 0.9%.
Yeah.
And they're saying that's because, more general positive macroeconomic conditions. plus the front loading in quarter one, which is a little weird because that would have already happened by April anyway. So unless they don't have any insight into, I guess, world trade on a semi real time basis.
It says a surge of imports into the U.S. in the first quarter ahead of the anticipated tariff hikes contributed to the upward revision to the forecast for 25. The previous one was done in April after Q1 was already over, and now they're saying the Q1 front loading is what contributes to our forecast change. Trade volumes come out, so it's like the question is like, okay, well, how lagged is the data? The Treasury departments, the U.S. Treasury, they publish a daily statement, which it doesn't say the trade volume, but it says what the income from tariff duties are. So you have at least some kind of rough proxy, even on a daily level, of what trade activity looks like. Very rough. And we touched on this in a previous episode, but that's just to say that it's not like the GDP calculation that's quarterly and effectively lagged by a quarter. I don't think trade volumes are lagged by that long. And then just because it's right up here front and center, and we talked about it before, let's see what the Director General had to say about this again this time. She said, global trade has shown resilience in the face of persistent shocks, including the recent tariff hikes. And then says those front-loaded imports, improved macroeconomic conditions have provided a modest lift to the 2025 outlook. However, full impact of recent tariff measures is still unfolding. The shadow of tariff uncertainty continues to weigh heavily on business confidence, investment, and supply chains. Uncertainty remains one of the most disruptive forces in the global trading environment. So this one is definitely more reasonable to me. Back in August, before the true reciprocal tariffs were actually implemented, it was still very unclear ultimately what was going to happen. But then emphasizing that very negative outlook, and then they close with saying, nevertheless, it's important that a broader cycle of tit-for-tat retaliation could be very damaging to global trade, but it's so far been avoided. Also continue with members to safeguard the stability and predictability so essential to the world trading system. All right, so a few months later, it's going to be bad, not quite as bad. Here's why.
Let's take a look at how did they change their outlook on the little graph. There you go. Move that little green line, went up a little bit.
Yeah, so it's kind of the same thing here. They new baseline. Is it just me, or does this look not perfectly straight anymore?
Yeah, it used to just be a totally straight. Oh, even a little dip up. Something funny going here.
We got some questions for the analysts that put this chart together.
Yeah, no, but
a little bit of revisionist history going on with your baseline forecasts.
Well, they did say new baseline forecast. So
yeah, that's true. Yeah, that's true. But yeah, so the contours of the chart here are the same, just a little less severe, a little less bad than they thought.
And like that April report, that's not something they do every month. That's like something they do every year. It looks like it lasts, from April to October. That's 6 months. Maybe they publish 2 of these a year.
Perhaps. That said, but yeah, so that brings us to today. Now, 2 months later, let's see how it's changed from there. So their headline here is AI goods and front loading lift world trade in 2025. But outlook dims for 26. So similar to August, here in October, they have revised up their projection again. Previously, it was set to increase by 0.9% year over year. Now it's at 2.4%. So now we're pretty close to that original baseline of 2.7%. Instead of just front loading, also now it's front loading and spending on AI related products.
Yeah, something like that. When you see something like this, to your point, it's like, without looking to actually see what the numbers are, my first gut reaction would be like, sometimes you're just trying to survive another day. And if you can just put something out in front of people where they wouldn't really be like surprised, or they would just kind of nod and go along with, just like whatever that would be is what you would explain. Now, again, I haven't looked at the numbers, but it's like, okay, what can we write to get an excuse to kind of change the the outlook, AI. People will probably accept that, and you put that out there. What is the most non-objectionable thing that you could write or say or do? And so sometimes for forecast, it's just drawing a straight line. And that's, I think, typically what we see. I think in this case, it would be very, for their audience, and I think the people who work there, the most unobjectionable thing to do after you get news about tariffs would if they said, actually, we're not going to change the numbers. It's like, no, you would have to revise. It's what's expected. And then they're just doing what is expected.
Which is reasonable. These are forecasts at the end of the day.
Yeah, but it kind of, you got to ask the question how much rigor there is behind them. And we don't have any insight, or do we? I mean, that's a pretty long report, but admittedly, they touched upon a lot of things, and 40 pages really isn't that long.
Any of these assumptions about global trade, net trade across all countries in the world, that's
tough. Model documentation, which I've seen before, hundreds and hundreds of pages. Particularly when they go around trying to justify assumptions and stuff like that's each one of those justifications is like a whole separate study. It can get like crazy complicated. Assumptions in assumptions, models in models. So
yeah, and then once you're at that level, to your point earlier, sometimes you're just trying to survive another day here. I got to add 2 more pages of assumptions to our already 200-page model doc. Year's almost over. Trade hasn't really deviated much, so we got to revise this up. But that's the thing with this, they still maintain their negative outlook. So they say now for 2025, it's expected to be 2.4% from 0.9. However, 2026 has been lowered to 0.5% from 1.8. So they revised up 2025 by about 1.5% and revised down 2026 by nearly the same amount, about 1.3%. It's almost like, we still know it's going to be really bad. It's just pushing a little farther out.
I mean, you can keep doing this and eventually it will happen. Something. Right?
Like 6 years from now.
The great economists at the WTO. Whoa. And then you'll find like one, they're revising this every couple months. You just got to grab the one that hits. You're like, we need more money. Yeah.
Even a blind squirrel finds a nut. Yeah, we need more money. You want better forecasts? We need more money.
Little down on the WTO, I feel like, so far in this episode. And we've got to come clean. I mean, like in general, these international organizations, not to spend too much into it. I like the idea of them, but it's just the in practice thing that always just gets really like the amount I think countries are going there kind of as individuals in the system, just trying to how to advance their own, like how do they get as much out of it for themselves as possible. So they're just kind of it's just being used. I don't know.
To be fair, I'm not trying to imply like they're they're wrong and it's so silly that they're wrong. Like this is like an impossible task. I obviously wouldn't be able to do any better if you gave me the world's best economists and like were to tell them what to do. Take your pick of some other head of the organization that had a totally different set of assumptions that was clear. It would still feel, like a fool's game.
Exactly. All right, Joe. Well, if you're so smart, then what's the trade growth going to be?
2.7%, of course, the baseline.
Yeah. Wow, look at that. Yeah. There it is. Man, you got to put like all 3 of these next to each other.
Yeah.
The green ones right on top of each other. We went all the way down from negative right back to where they started. But
right back
you're right.
to it.
But their 2026 still lands in the same spot, just different orders.
So that's the thing. It's like this is it's almost subjective, the result that you want. It's very dependent on all this analysis, but all those assumptions, they still clearly maintain their negative outlook. And to me, it seems like again, we don't know what's going to happen, but we do know 6 months on, this tariff regime has not been very detrimental at all to the global trade order, number one. And it's brought in a ton of new tax revenue for the U.S. with still very limited, if any, evidence of increased inflation. Before all this happened, it was just a foregone conclusion in economics that tariffs are bad. Tariffs are negative for everyone involved because it's an act of government, and government is inherently inefficient, compared to the free market. So we shouldn't have them. It's going to hurt everyone. It's going to hurt the country paying the tariff. It's going to hurt the country imposing the tariff because they're not going to trade as much then. It's going to be bad for everyone involved. And to me, so it sounds like that's the clear underpinning still today of all of these forecasts that they have. So 6 months in, things haven't crashed, and global trade hasn't plummeted. Not yet. It's still coming, but just not yet. So I guess what I'm trying to get at is, should we be challenging that assumption that tariffs are always unequivocally bad for all countries involved? Or is it the case that we've been in a very unbalanced global trading order for decades, and we could actually extract some net positives from all of this?
Yeah, I guess one of the things that you said, saying that they're bad because they're government, and government is inherently inefficient.
That was my macro 101 textbook popped in my head there as I said that, because I always I remember that being spelled out very clearly in these models, that the simple introduction of government activity decreases efficiency as compared to the free market.
Yeah, okay, I see what you mean.
But is it always that simple? I guess, as we're looking at the world today over the past 6 months, maybe it's not quite that simple. I mean, maybe we eat these words in 6 more months from now and we really do see this big slowdown. But, till then, just keep revising up that forecast.
I don't know. I mean, do you want to make a prediction? So we go from a little podcast to a big podcast, Joe. It's moments like this. Who called it? I made a prediction that last thing about the government shutdown lasting 2 to 3 weeks. That's what I thought. So far, what are we on? Still kind of on pace for that.
Yeah, we are. You got 10 days so far. Yeah, I guess if I were to make a prediction, and I've alluded to this in previous videos, and I think it's obvious from how we've talked about this so far that obviously I don't agree with the assumption that tariffs are bad for everyone no matter what. It seems overly simplistic. That's what I learned in the textbooks. That's what everyone learned. That's what everyone still says. I don't think it's that simple. The main assumption is that the U.S. is going to be harmed because they're not going to trade as much, so the price of goods are going to increase, not only because of increased tariffs, but because of a decrease in net trade that's done. So the U.S. will have to create things in the U.S. that's going to be much more expensive to do. The U.S. has the most expensive labor in the world. Generally speaking, it's going to be more expensive.
Yeah, it's more expensive and like not as good. Whatever it is. Like, this isn't the way that it works. It's just, I mean, in an extreme case, a big reason, I always kind of think in an extreme case in like the Soviet Union or something, where you just literally couldn't get certain imports. So you kind of, were just faced with the fact that you didn't have access to the best stuff out there. And the best stuff out there isn't always going to be in your own country. It's going to be from, every, like, to put it differently, if there are 300 and whatever million people in the United States, but globally there's going to be 9 billion, whatever it is, you got to presume that a lot of the best stuff, or whatever it is, service, whatever it is that you want, is outside of those 350 million people. And all of a sudden you're shutting that off, like in an extreme case, just for illustration purposes, that you don't have access to that best stuff. You got to settle for, and that's where like the real utility and where things, I think, start to hurt. In an extreme case, like you could only buy American stuff, for example. And then all of a sudden, this isn't the best example because like, I'm a fan of Honda. That's like a Japanese automaker. But then I guess in that case, they have a factory here and they build it here. So in like Trump's world, it's fine. As long as it's built here, it's fine. But you see my point. Yeah, you settle for like Chevy.
That's under the assumption, though, like you're saying, just be like, if I think I read you right, the US is a very small percentage of the world population. As a result, there's statistically there's not going to be the best all in the US. That assumes that every country's uniform in terms of,
Yeah, fair enough.
their
I mean,
ability
it's taken
to
to
create and innovate. And
yeah,
I'm clearly a proponent of American exceptionalism.
but even but even if like half, forget, what if it was just like half? Imagine, you're right. The number of people is not the best metric. I agree with that. Okay, consider number of companies. Okay, it'll be a little different. Number of big companies, whatever. But like there are a lot of good sources of entertainment from Japan. A lot of good tech companies, in Europe.
Hold on, are there?
Well, the one thing I was thinking of was that video game we really like. That's actually not a U.S. game.
Yeah, I know that, but
And like, imagine if you just couldn't play
is
that.
that
That would
an
suck.
innovative tech company? I'm not
The
sure.
point is, it's a product that we have in our life that makes it better.
That's true, but where
all I
did
mean.
where did that initial innovation come from? I would argue U.S. tech companies.
Sorry, why
That's kind of
you're suddenly talking about innovation? That's different.
well. Hold on. Uh, Back to, I think where we can both agree is that if trade is diverted in that way, people are going to pay higher costs for things, whether it's higher dollar amounts or lesser good products.
Okay, fine.
I think that we both agree on that.
Yeah.
Back to my initial prediction, I think that even that assumption that will even happen is not so clear. I think just by the sheer numbers, and like I'd mentioned this in a previous episode, that kind of assumes that all other countries can just perfectly substitute the U.S. market. The U.S. market is unmatched in its size. There's at some level, there's nowhere else to go to sell your things in the world. So I guess my prediction is that these tariffs are not going to be as bad as people think, and countries are just going to have to pay for them because they need to send it somewhere. Is there going to be some redirection of trade flows? Of course there will be. But structurally speaking, I just don't think it's going to have even a fraction of all the doom and gloom that is continuously and still predicted to this day.
Yeah, no, that's fair. I mean, the example I was taking was just if you shut it off, just to illustrate a point of trade is generally just better because your life gets a little better because you have access to better goods. But that's not what we're talking about. We're talking about basically if there's a tax on it.
Mm-hmm.
When you go to
people
buy
are
it.
going to pay a little more, and I think my
People are
assumption
going
is
to pay a
that
bit more.
countries or companies, they're going to pay because they have to. I think is kind of my prediction. Like you're not going to see this catastrophic drop in trade volumes and see inflation go through the roof. If you just stopped all trade, then yes, that would happen, of course. But is just, paying a 10% or 15% tariff going to cause that? I really don't think so.
The other thing that they could be talking about is you're just kind of thinking about this a little more, just because also that trade, the fact that their metric, the WTO's metric is just going to be trade volume. They want more trade. That doesn't necessarily equate to being a good thing. So that's just kind of a funny metric. Going back to the very beginning, I mean, what this is, it's trying to act as an incentive for these other companies to start manufacturing and building the product in the United States. That's the reason for the tariff. Now, if he's successful in that, then it's possible that the total amount of trade would go down, but that would be a win from Trump's perspective, right? I mean, you still are buying just as many, if we want to stick with like Honda or something, like Japanese cars. It's just that they're built here. Maybe you could say like, well, you need to import or something, the engines or all the parts or something, but even that stuff is can be made here.
Mm-hmm.
So maybe they're just trying to get the whole supply chain. So imagine in an extreme scenario, just to illustrate a point, if you had the entire supply chain in the US, but you were buying like a Japanese car, the trade would go to zero, right? So it would still decline, but it would be hard. You'd be hard pressed to say that these two countries aren't, cooperating very closely. You know what I mean? Like they're still deeply intertwined, but trade has gone to zero. because the supply chain 100% is already in the other country, but you're still deeply, deeply like ingrained. So the fact that like somehow more trade is somehow better, maybe not. Maybe more trade just gives you more opportunity for tariffs. Like if you wanted to have zero tariffs, put the entire supply chain like over there.
That's true.
Now, obviously, like, obviously you can't do that. It's not like you're going to have 160 or however many countries different supply chains. So at some point you got to like cut it off. But in general, net, it's not like a necessarily a good thing that the amount of trade goes up from the U.S. perspective or anywhere, even for their underlying, I think, philosophical drive, which is to get the whole world cooperating and working well together. I wonder, like, I'm taking cars as an example. Cars are super complex, but I'd be curious otherwise. Like all the big four or whatever consulting companies, they have offices and they're hiring people abroad. I wonder how that those aren't tariffs, but it's still like a U.S. company and all that. I'd be curious to take a closer look at that.
Yeah, definitely. Maybe we should do that.
One other thing I did look, this is sort of my marker, these shirts that I got, these like little stretchy shirts, super not cheap. But remember when I said when tariffs first rolled around, I was getting these on for pretty cheap? I'll just tell you, Joe. I'm just going to come straight out and say, I can't do it. I know people who watch the show. I can't come out and say how much these are. These are not expensive. I'll make up a number, okay? $50. And like when they, but they're not $50.
What are they, Luke?
They're like $20.
Spill
you could
the
like look
beans.
up online. It's like $20 for this shirt.
You're gonna get judged so hard. Now.
I'm judging myself.
It's over.
I'm like, oh my god. I went to Costco. I got a couple of those shirts. They're also like 20. They're like Calvin Klein shirts. You can get at Costco. Oh my god. Clearly, I'm not like,
wearing your custom Italian silk shirts.
I was going to say, yeah, clearly that's not, I guess, who I am deep down. I've sort of already said the philosophy that I think, your like your body and form should be the thing that you spend like the most time and energy and money on, just like your overall health, and then the shirt and stuff on top of it. Anything would look good if you sort of, but anyway, so like I was looking at these are like $20. And that's sort of my marker. And I remember when I said that when I looked again online for like the same shirts, everything was up by like, they were up to like $30. They're up by like 50% just right after the tariffs things came out. I just took another look and they're all back down to like 20.
Yeah, that's the other thing that I always push back on is, the super simplistic assumption. Oh, you raise tariffs by 10%. Obviously, the seller is going to raise their prices to the consumer by 10%.
Yeah, no, I should preface by saying I don't know like what is or is not like still included and excluded from all that. I mean, I assume a lot of these come from China and that these are still included. I think you're going to get to this like right now. That's sort of what this was doing. But just a little disclaimer.
Yeah, but with that, and I always question that assumption because that assumes that that's the only way to get these shirts. And if you raise the prices too high, but there's alternatives, the price is going to have to come back down or else you're not going to sell any shirts. And if that's able to happen, which I think you're describing, you're seeing that with these shirts, then the tariff's not really having much of a net impact. Someone is paying a little more along the way. But so far, it has not been the consumer. Maybe it's the other country. Maybe it's the local company importing it, but it's not this simple scenario where tariffs go up by 10%, consumer inflation is also going to go up by 10% as a result. So rather than a global view, the New York Fed goes through and they take a more country by country view, and they just try to shed a little more light on what has happened so far, what have been the net effects of this tariff regime, and how much has each individual country actually ended up paying. Because if Trump comes out and says, Japan, UK, whoever has a 10% tariff, there's all kinds of carve outs along the way. And so on net, you're going to have something that's less than 10%. So they have this little table here, and based on US Census data, based on the International Trade Commission at the U.S. Using their data, they're able to calculate or at least estimate in some way what the quote unquote true tariff rates are for these various countries. So in this table, they go through saying here's the actual realized tariff rates across all products. So on net, on average, all countries globally, it's about 9.7%. And that makes sense. You average across enough countries, you are going to get to close to that actual level. So the baseline is 10%. And then it goes through and starts talking about the differences here. So at the top, you see China is paying a 40% tariff on average, whereas Taiwan and Canada only 3%. And so the differences there, and then it says here are the share of imports that are subject to tariffs. Basically, what are the carve outs? So for China, Trump really hasn't been carving out anything, wants to apply maximum pressure. 94% of all trade is subject to that tariff. Whereas Canada, Mexico, 18.9 and only 10%, that's largely due to the USMCA agreement. So while they, are subject to this 10% minimum or whatever, there's all these carve outs, and really on net, they're not paying all that much. And then they say average rate on what is tariffed. So for China, it's very close to what the average is because there's very little carve out. Whereas again, on the other extreme, Canada is paying on very little, but the average of what they are paying is almost 29%. And that lines up with Trump's latest level on Canada of 35%. So at the end of the day, at least for Canada, that's really just posturing because on net, they're only paying 3%. Whereas China, they're paying the whole thing through pretty much.
Yeah, right. So there's a couple things here. I guess scrolling, I'll try to give
Sorry, where?
All the way back to that table. Yeah, right. So there's the realized tariff rate. So if like China, you took all the goods that were imported from China, you'd say we were getting like 40% on that number across everything. But then what they're saying is if you look at the rates on the actual physical goods that are tariffed, those are like at 43%, that number. And the reason why the 43 and 40% are so close is because they're basically putting that 43 rough number over all tariffs. Whereas the European Union, that 9.1% is across all the goods. But then only 61.7% of all the goods that are imported are actually, have a tariff on it. And of those 61.7%, the tariff rate is the 14.7. So it averages out to like the 9.1. So there's some interesting dynamics going on here.
And then I think the EU's level is 15%. So it is interesting that the this rightmost column, it is pretty close to what the specified level should be. I mean, I guess that would be a question of like tariff enforcement, but I guess this is just saying when Trump says it, yeah, it's real. It happens. That's about all I got for you this week, Luke. Latest chapter in the tariff saga that I will never stop talking about.
Yeah, no, that's interesting context.
All right, well, this has been the Root of All Evil podcast. Thanks for tuning in. I'm Joe.
I'm Luke.
We'll see you next time.
See you next week. Bye.